I think the markets have read it positively. That is, the RBI is here to support growth as and when inflation comes down to its target level of about 6 or 7%. I think with an SLR cut, it allows banks to provides bank with additional facility for a credit growth as and when corporate demand for credit growth picks up. And with the revival of the equity markets, we will see a spate of capital market offerings, and companies will start repairing their balance sheet. And as and when demand increases, you will see an increased return to credit growth. I think so. Therefore, it was a good step by the RBI by cutting the SLR and creating room for additional credit growth.
Mr. Lokapriya, what are financials looking like to you at this point in time, especially PSU banks, given over the last few days you've seen a flurry of activity and talk from New Delhi on recapitalization of banks, planning a holding company, really going after willful defaulters?
PSU banks, at the end of the day, are a very important component of the overall banking sector. I mean, just to look at it, nearly 70% of all loans made in this country by the banking sector is by PSU banks. About 90% of all infra loans is made by PSU banks. So, and PSU banks today need capital, and so recapitalizing PSU banks, and there are many routes possible to do that, I think should be a number one priority, and rightly Mr. Modi's government is focusing on exactly that. I think it could be in a variation of creating a holding company or creating something similar to what the US did after the Lehman crisis, which was the TARP, the TARP, the Troubled Asset Reconstruction Program, where they in a sense bought the bad assets from institutions, from banking institutions, which freed up the balance sheet for the banks to turn around and make out fresh loans to corporates. And I think so recapitalization of banks in one form or the other, and the holding company, I think, is a great way to do that. It allows the government to continue to maintain its stakeholding or shareholding in the companies, in the banks, at the same time frees up the bank's balance sheet and strengthens the balance sheet.
There is talk of FDI in insurance, even letting insurance subsidiaries of PSU banks get listed. In that light, how would you play this space?
I think the insurance is again another sector. The FDI to go up to approximately 40% is something which is vital and is likely to happen. And I think the main theme there is largely SBI, State Bank of India. There are smaller other players, but within the PSU space it's SBI, and of course you have companies like Max, which will also benefit from an FDI in the insurance space. But as far as the PSU is concerned, we are primarily viewing it through SBI.
Mr. Lokapriya, the next big trigger for the market would be the budget. How do you really see the market fare between now and the budget, which is scheduled to happen by July?
I think that's a good question. What we have seen thus far is the large caps and many of the beaten down companies have rallied quite hard. But even after this rally, the broader market is still inexpensive. It still trades at about maybe 10-11 times, not the Nifty, but the mid-cap index. I think the mid-cap index still offers a lot of opportunity. I see that that particular segment continuing to perform well in the run-up to the budget. The large caps, still there are pockets which are still undervalued, and I think in a sense the mid cap would probably do better than the large cap in the run-up in the next few weeks to the budget.
So in this light, what are some of the specific areas which may be addressed in the budget in your view and may be taken up for further reforms by the government?
We would expect policy measures in the budget for the banking sector. Second, infra. Infra is, as we know, a very big theme, an important theme. And reforms there, 10%, 90% of all infra loans have been made by the PSU banks. So some form of a bad bank creation, if you will, which will buy out some bad loans of infra. And mind you, many of the infra loans turned bad because of policy inaction. So you have more than 5 lakh crores worth of various infra projects in power, road, etc., which are close to near completion but are waiting for land clearance or environment clearance. So just a fast tracking of all infra projects which are near clearance, which is about 5 lakhs crores, which will again add to future EPS growth. So I think in summary, it is banking sector reforms, specifically in PSUs, and second is infra reforms will be the key expectations from Mr. Modi's budget.
So just a few multi-bagger themes for our viewers which you believe can be approached in the mid-cap space.
I think the themes are still fairly consistent with our last interaction, which is within the mid-cap space. I think PSU banks offer tremendous value. In spite of all this run-up, still many of these banks are trading at half a time book value. Companies like Union Bank, Canara Bank, these are all very large banks. And yes, I understand that the adjusted book values will be slightly higher, but in a reviving economy, a half a time book value is still a very cheap valuation. Auto ancillary companies are still will benefit immensely from this sector. You have companies like Amar Raja, Wheels India, they should benefit. Operating leverage, companies such as cement sector, various companies, JK Lakshmi, JK Cements, they should all benefit because they have the operating leverage and their operating margins will improve as the economy revives. And finally, infra. I think in many of the infra names like Simplex or even the large companies like L&T are still inexpensive in terms of the expectation of growth will accelerate going forward. If you look back again, coming out of the 98 to 2002 economy, the downturn, for the following 5 years, that is between 2003 to 2007, earnings of Nifty grew by about 27% CAGR over between 2003 and 2007. And in that run-up, the stock market went up by nearly 600%. And I think we are in a similar cycle now. The economy has to fix itself. The economy will revive if these policies are implemented. And there's no reason not to believe that we won't have a similar bull market run over the next 3 to 5 years as various policies are implemented.
All right, Mr. Lokapriya, we'll let you go on that one. Thanks a lot for joining us on the show this evening.
Thank you, Ajay. Thank you for your time.